Hi, I'm Dikshita. Come learn with me at Hint2Mint. Hi guys, every week we post a video on the most trending market news that you should all know. Today we'll be discussing about Happiest Minds Technology, the very hot topic this week. This company is coming up with an IPO along with OFS, which is why this company drew the attention of many investors. Stay tuned for more latest updates of the share market. Watch this video till the very end to know what I did. You will come to know if I participated in the IPO or not, and I will also tell you what future I am predicting. Please note that this is my personal opinion and I don't recommend you guys to follow my strategies blindly. Please consult your financial planner before taking any investment decisions. This video is only for educational purposes. Let's begin by knowing a little about Happiest Minds Technologies. Happiest Minds Technologies is a private limited company headquartered in Bangalore, India. The company's services include digital transformation, infrastructure, security, and product engineering. They provide services in banking, insurance, manufacturing, retail, and provide a lot of automation in other sectors as well. The company has operations in US, United Kingdom, Canada, Singapore, and Australia. The company was founded in 2011 by Ashok Soota, Aurobindananda, Dattatreya Salagame, Joseph Anantraju, Puneet Jetli, Raja Shekhar, Raja Shanmugam, and Salil Godika. In November 2011, company got a funding of $44 million by JP Morgan, Intel Capital, and Ashok Soota. Happiest Minds partnered with several companies since inception. To name a few partners: July Systems from California, Kiddozen from Florida, DataVine from India, MongoDB from New York, Exchange Labs from Texas, OpenBravo from Spain. The company acquired Cupola Technologies and OSS Cube in 2017. Earlier, the company had 157 clients officially, which have crossed a bar of 170 plus. Currently, the company's competitors include TCS, Infosys, L&T, Infotech, Mindtree, etc. The key person of the company is Mr. Ashok Soota, and only his presence has attracted private equity investor JP Morgan CMDB2 as the second largest shareholder. Mr. Ashok Soota's percentage of shareholding before the IPO stands at 48.83%, while that of CMDB2 stands at 19.43%. Happiest Minds Technologies Share Ownership Plans Trust and Ashok Soota Medical Research LLP holdings are 4.07 and 12.8 respectively. Let us now focus on the company's financials. In the financial year 2019-20, the company reported consolidated net profit of Rs 717.1 million. The profit on revenue from operations was Rs 6,982 million. The company's interest costs have reduced significantly since the last 3 years, from 99.55 million to 80.2 million. The borrowings on the balance sheet has declined from 148.3 million in 2018 to 13.2 million in the year ending 2020. Company reported a loss of Rs 224.7 million in the financial year 2017-18. Since then, the company's financials have improved significantly, recovered from loss and made a mark at 717.1 million. Basic earnings per share stood at minus 3.13, 1.89 and 7.04 in the year 2018, 19 and 20 respectively. Studying the financials, though the company has a very low debt obligation, but still isn't a sound company, hence SEBI also classifies this as a risky company. Also, it is important to understand that majority of the company's revenue comes from US, which has a majority market share of global technology spending. The share of the US in the company's revenue has been consistently above 70% and stood at 77.5% in financial year 2020. While India's market share stood at 11% in 2020, if there would have been any fluctuation in the US economy, the company's revenue would be hit badly, which again makes it very risky. Before heading ahead, let's understand the basic difference between an IPO and OFS. When a non-listed company issues fresh shares in the primary market for the first time to the general public to raise funds, it is known as an IPO. While when a company decides to dilute stake of some shareholders of the company and offer it to the general public, it is known as OFS. The basic difference between IPO and OFS is in terms of number of shares and ownership. IPO leads to increase in the number of shares, while in OFS, number of shares do not increase. Hence, share capital does not increase in OFS, but in IPO it does. In IPO, addition to current owner of the company takes place, whereas in OFS, ownership from one owner is transferred to another. Some companies combine their IPO with OFS and give partial exit to promoters and to private equity investors. Likewise, our subject company, Happiest Minds Technologies, is coming up with an IPO and OFS combined together. Now, without any further ado, let's move on to the IPO and OFS of Happiest Minds Technologies. Book runners for the IPO are ICICI Securities Limited, Nomura Financial Advisory and Securities Private Limited, and KFin Technologies Private Limited. Price band was announced on 2nd September 2020. Anchor investor windows opened on 4th September 2020. Offer for retail investors will open on 7th September and shall remain open till 9th September. The final allotment of shares shall be complete by 14th September and the shares will be credited to Demat account on 15th September. The company will get listed on NSE and BSE on 17th September for trading purposes. It is important to highlight that due to the company being a risky one, after studying the financials, the retail investors will get only 10% of the offer. The upcoming IPO plans to Rs 1.1 billion by issuing fresh shares. However, there will also be an offer for sale by promoters and existing investors involving 35,663,585 shares amounting to as much as Rs 592.01 crore. This puts the total IPO size to Rs 702.01 crore. The face value of each share is Rs 2. The price band is fixed at Rs 165.66 per share. Investors can bid on a minimum of 90 shares and in multiples of 90 thereafter. A minimum of Rs 14,940 can be invested by a retail investor, while the maximum limit is 1,94,220. The company aims to raise Rs 702 crore via public offer. QIB shall have 75% of the offer, amounting to Rs 526.51 crores. HNI will have 15% of the offer, amounting to Rs 105.3 crores. Lastly, retail investors have 10% of the offer, amounting to Rs 70.2 crores. The total for all these categories comes up to Rs 702 crores. Now, as promised, coming on to my opinion. I am planning to invest in this IPO because I've always been a risk taker in these markets. Since we've discussed all the financials, I'm sure you guys are aware of the same too. If you are risk takers, it is a good opportunity for you to try your money in this IPO. If you're lucky and you get allotted the shares, it is a good idea to sell them on the opening and book profit that time. If you like this video, please like, share and subscribe to our channel Hint2Mint. Also, don't forget to comment in the comment section below if there's any particular topic on which you want us to make videos. Till then, adios.